Hi friends, this is Rakesh from Let's Make Learning Simple channel. Now we are going to see how we can reduce tax using employees provident fund. So actually this is an implicit benefit scheme. So each month you would have received some salary from your company. Whenever you receive, you would also get the salary slip or pay slip from your finance team. If you look that finance pay slip in a very close manner, you would have noticed that 12% of basic salary is automatically deducted from your basic salary and it is contributed or deposited in the EPF account, and another 12% is deducted from your basic and another 12% of basic salary is contributed by employer. This is not actually listed in the gross salary. We will talk more about this in this video. So first of all, we'll see what is the employees provident fund. So employees provident fund is a one type of retirement benefit scheme. So at the end of your career, if you need some amount, so you can use this EPF amount for that. If you are working in a company and the company goes in a wrong direction or in the backward direction, and you are asked to go out of the company, then you need some amount at that time. Then you can use this EPF balance for that purpose. And next scenario, if you are working in the company for 20 or 30 years and you are trying to get retired from that company or from your career, then you can use this EPF for some purpose. And another scenario, if you are working in a company and you are trying to jump to other company, so if you take nearly 2 to 3 months miss, then you can use this amount for that at that time. So these are the various scenarios where we can use this EPF amount, and then this is maintained by Employee Provident Fund Organization of India. It can be EPFO. So nearly 24% of basic salary is contributed every month towards EPF. So it is divided into two parts. 12% of basic salary is contributed by employee, and another 12% of basic salary is contributed by employee. This 12% of basic salary comes under 80C savings schemes. Under 80C savings schemes, you can save maximum of 1,50,000 rupees. You can show this amount to tax. You can reduce this amount from the taxable amount. So if you are an employee, you are earning nearly 10 lakhs per annum. If you use complete usage of 80C, then you can reduce the taxable amount from 10 lakh to 8 lakh 50,000. So this EPF also plays a major role in that. And another 12% contributed by employer. So this 12% doesn't come under your gross salary. If you look at your pay slip, so if you analyze your pay slip, only this 12% employee contribution will be listed in that pay slip. This 12% wouldn't be listed in your gross salary. If you are working in a company, you are doing very well, and if a company decides to give 20 or 30% employer contribution towards EPF, then the remaining percentage from 12 to that amount, suppose a company is paying 20% of basic salary towards EPF, means that remaining 8% is taxable, that comes under gross salary. So till 12% that doesn't come under gross salary. So this is the tax savings information. This 12% is divided into two parts. 3.67% goes to EPF, Employees Provident Fund, and 8.33% goes to EPS, Employees Pension Scheme. So interest. So when we talk about the interest, it is compound interest decided by the government. So this interest may vary every year based on the constraints. So this will be calculated annually. So opening balance for every year is calculated using this formula. This would be some complex formula. There are many applications for viewing the opening balance for every year. Opening balance plus total monthly contribution plus interest on opening balance plus contribution. This might look very complex formula. So you would have many applications for viewing this thing. And there is an app, official app, to see the total contribution made by the employee and employer and the total amount that is present in that account. So you can use that app for viewing the details. So withdrawal. So there are many constraints for withdrawing the EPF. So minimum years required for withdrawing the EPF without any tax means 5 years. There are some other constraints also apply. So if you need to view all those constraints, please comment those constraints in the comment box. So I would also take those things into consideration, I will take the video further. So thanks for watching. At the end of this video, you will see the channel icon here. Please click on that for subscribing the channel.